Hey everybody, welcome to the September channel member exclusive video. It's great to be back again for you guys. Once again, huge thank you to all the channel members. Is that little bit of extra that you guys put in helps support the channel, and that is not a that's not a little thing. It's actually pretty darn awesome. So huge shout out to you guys. So this month, you guys had the chance to vote, and you voted for, well, it's a pretty plain topic, but it's monthly dividends. Everybody loves those dividends. So we're going to talk mostly about dividends. Anybody who is catching this live, if you've got dividend questions, feel free to throw them in the chat, and we'll definitely get to those, in addition to a few bits of material that I want to cover. The first thing I kind of want to cover is we had a question, or we had a suggestion, I think for last month, about how to use stock screeners. Now, stock screeners are very, very useful when it comes to, well, locating stocks that you want to maybe check out, stocks that you want to throw some due diligence at. Well, the TSX, their website, which is TSM. So let me just pull it up. I'm going to pull this up right now. This here. All right, here we are. So the TSX has their own little website, and it is money.tmx.com. Now, this is a great website, and I need to be able to see what's going on over here. So I'm just going to move this over to the side. So when I'm looking at the website, I'll be slightly looking off to the side, but the most important content obviously is going to be the website. So here's the beautiful thing. This is also an ideal tool for locating your dividends, especially your ETF ones. Now, most of you probably already know that one of the things that you can certainly look at is you can look at their top stock lists. And they have one here for top dividends. So if you click on that, it'll bring up the big dividend payers, the ones that are out there. So it'll bring up everything from split core to ETF to just regular stocks as well. So you can sort of see right here, we got GDC coming in at the top with a dividend yield of 65.50%. That sounds outrageous. And I'll tell you, let's just go take a look at this very quickly. We're going to open up this GDC, Genesis Land Development. All right, so their price is $2.20. So they're almost a penny stock. That to me has me a little bit worried. I will like to jump in and see the 10-year. So the 10-year, they've really had no growth. It's like just a sideways growth pattern for them. Okay, their earnings per share, positive. 8.5 cents. Their dividend yield, so it shows here at 68.182. Now, it doesn't show a dividend frequency. That's a huge kind of red bell for me. But if I come over and go to my key data, it'll show me when dividends have been paid. So let's see, May, November, August, December. So it looks, well, I would say that it's kind of a haphazard dividend, to be honest. So this is one I would shy away from right away. Now, it is not an ETF. I'm going to just close out of here. We'll go back to that list. But you can see that's one way to find some high dividends. But there's a better way. And what we're talking about is, we're talking about some of the tools that are available. Now, let's come up here. Under tools, we have a stock screener. Now, I will use the stock screener a lot just to find new stocks. I'll put in different criteria that I'm looking for. But what here is brand new on this site is they have an ETF screener. So the TSX ETF screener. So here's a way to find some of those dividend ETFs. So when we come in, you'll see at the bottom, it's got a list of everything. That's because we don't have any filters on it. So right now we've got 194 ETFs that it is showing. So we can actually come up here and put in, well, we can put in some filters. So let's put a filter in. We're going to go to the fundamentals. And all right, so we can put in, for example, monthly. We already had monthly in. So interestingly enough, if we didn't have monthly in, we would have had 206. So getting rid of all of the non-monthly ETFs, it takes us down to 194, which is great. And currently we have a distribution yield in there already of basically anything from 5.1. You get a little slider here. So this is 0. We can go for 5, or we can go, depending on what you feel is your goal when it comes to a monthly ETF. So, for example, if you're a passive income investor, you might be saying, heck no, I'm not going for anything less than 7%. So we'll put that up to 7% then in that case. You'll notice here on the side, 101 results. So if I were to take this up to, let's say, 9%, all of a sudden we've only got 35 results. So let's leave it at that 9% because, we're going to be dividend chasing for this one. So we'll leave it at that 9%. We just close out of here and we have our 35 stocks right here. So what we want to do is we're going to click on the fundamentals, and these are the distribution yields right here. Oops, we'll go from highest to lowest. So here we go. This is what it is showing us. Now, here's the thing. You don't want to just blindly assume that it's right, because sometimes this distribution yield can be way off on this website. And it's just funny because this one actually, TMX is the company that owns the TSX. So you wouldn't expect it to be off, but it can. And we're going to show you right away with this HFG. I'm going to right click on that and we're going to open it in a new tab. So this here is the Hamilton Global Financials ETF. And I know, I can, without even looking, I know this one does not pay a 9% dividend. So that's one of the things you're going to do. You're going to come down, you're going to check. Yeah, look at this, 4.108%. So I'm not sure where it's getting some of its data. So sometimes it's wrong. Most times it's not, but sometimes it is wrong. So in a case like that, you just sort of take a look and you can go, whoops. You can go to the other one. And you guys didn't even get to see what the oops was for because, or well, maybe you did. I don't know. Sometimes with an Apple, if you click a specific way, it minimizes everything into little boxes. And that's what the whoops was for. You guys may not have seen it, though, because I'm sort of sharing one tab. All right. So the next one, ETH.U. Well, yeah, that's one of the Ethereum spot ETFs. Now, the .U is actually pegged to American dollars. So let's take a look at this. We'll open this link and we'll come over. So Purpose Ether ETF. There's your dividend yield, right? Nice, 16.542%. And see right here, USD. So this one is the USD one. So that may not be one that you want. You may want to grab the Canadian one. Unless, of course, you want it in USD dollars. I mean, nothing's stopping you from doing that. All right, let's close out of that one for a moment. The next one here, ENCC. And you notice right, oh, look at this one right down here, BTCY. That's not what I'm looking for. There it is, ETH.B, ETHB.B. Just going to open this one up. And this is the one in Canadian dollars. And you'll see right here, CAD. Now, its dividend yield is much lower. So that might be a reason. There we go. That might be a reason. If you're getting more bang for your buck with the other one, that might be a very good reason to go with the USD one, especially if you have a USD account. A lot of people, Wealthsimple will have, they might subscribe and get the USD accounts, and then that would be a perfect one for it. But let's go. I want to go back to ENCC. So this one here is a covered call ETF. EN, I believe it's an energy one. Let's take a quick gander here. We're going to open this up on a new tab. So yeah, it's the Horizons Enhanced Income Energy ETF. So it is an energy ETF. Awesome. Love the energy. So we're going to come down here. We're going to take a look. So, okay, 14.121%. That's not bad. Monthly, like that's what we wanted. 13 cents Canadian every month. PE ratio of 8. We don't have an EPS on that. Sometimes you won't with ETFs because it's kind of funky the way the data works. But what we're going to do is we are going to come over and take a quick look at the key data. I always take a quick glance in here because this does give me a little bit of some of the fundamentals. So, for example, so we got a PE ratio of 8. Whoops. Price to book 1.4. I love this. This is a good number, 22.50% on the return on equity. And then I'll take a look at their dividends, right? Now, if they're monthly, I should be seeing 13, 13, 13, 14. So right here, I've noticed back last year, so between November and December, they did cut their dividend. I see that right away. I'm just going to go one more page back. And yeah, so they cut it more than once. So there is that one little concern. But for the most part, it has been above 10%. 10%. It has been above 10 cents. So, it's not that bad. Now, another thing, too, is I'm going to take a look, too. And this is me. I will always do this. I just want to take a look and see what it's been doing. So this is really, really interesting, actually. This right here has got to be the pandemic, because that's that characteristic pandemic drop. And there it is. Yeah. See, March 2020. You'll find that when you look at most, if you're a newer investor and you haven't been around long, just start looking at charts and you'll be able to recognize that pandemic bump right away. So it's huge. So before the pandemic, it was coming in around here. So let's just say we had a little bit of a downward trend. And since then, look, it's actually come up. It's kind of following the market. It's actually not that bad of a price action. So yeah, ENCC, I'm kind of liking this one. So this is definitely one I would look at and I would say, okay, yeah, this is worth doing some due diligence for. So I would check that onto the good old watch list. And that's kind of what I will do. And I'll rinse and repeat, right? So we have that one. The next one, call. Now, I know with call, I've kind of become a little more disillusioned with call lately. But let's open it up and take a gander. So first off, 13.966%. We got our monthly. We're just going to go straight up to the 10-year on this one. But we go to the 5-year. For some reason, the 10-year gets a little bit wonky on some of these. But yeah, once again, pandemic drop right there. Yeah, so this one here has had a little bit of a struggle. So it has fallen quite a bit. Like it's more than half fallen. To me, that is a concerning amount. And I think that's one of the things that did concern me with this one, is that it's falling more than I'm comfortable with. Now, it's nice to be able to get that dividend all the time. And some people are more or less like, well, okay, as long as they don't cut that dividend, who cares how much they fall? Because that just means I'm getting it at a cheaper price, and that yield is getting better for me. So let's just take a look. Well, let's look at their dividend. We come in, we'll take a look. 0.125. This is pretty consistent. Okay, so that's not too bad, not too shabby on the dividend. So that's not too shabby. That is something I do like to see. I like to see that consistency. I like to see, even though they had all of that drop, that they're not at a point where they are going to be a bit of an issue. Now, here's another thing too, is you can look at all of this. And even though, and this here is, well, right here answers a lot of questions, US banks. So that's one of the issues I have with this as well. I think the banking sector is still in for a bit of a rough ride, but it will come back. When the banks recover on the other side of the financial issues that we're having right now, this here is going to come back up. So this may actually not be one that I should be down on, to be honest, but I was a little leery of some of this price fall. Now, I've never really been into calls either. So I want to put that there, that I haven't really had any skin in the game on this one. But here's one I really want to look at, because I know all of us have been into this at one point or another. And this is HYLD. So let's come over here and we're going to open HYLD. So this is, of course, the Hamilton Enhanced U.S. Covered Call ETF. A lot of us have loved this ETF. We're not going to look at that yet. Let's just first of all look. Right now, 12.794%. Dividend, 12 cents Canadian. Now, before I even look at that, I want to show you guys one thing about this one. This one did have a dividend cut. So when we take a look at their dividends, you'll see it used to be 14, and that goes all the way back to their beginning. If we go all the way back to their beginning, okay, well, it was 13.8, but close enough to 14. They rose it to 14 just after they launched, and it's been there, but it has come down to 12. Okay, so that's that's fine enough, but let's come back here once again. We're going to take a look. We don't have to, we can just go to the 3-year because they've only been around for a little bit. The 3-year's gotten a little glitchy. Well, we'll go to the 1-year then. All right, when we look at this on the 1-year, you can see we've had a lot of interesting price movement. So it is a little higher right now, but if you got in early, you probably got in at, well, let me find out. I'll tell you where I got in. This here is my, just give me a second. I'm just pulling up Wealthsimple here really fast for you guys. Because I wanted to demonstrate where it was at when I got into it. All right, I'm into the TFSA. I just got to scroll down to HYLD. HYLD, here we go. Yeah, so I get in at an average price of $13.26. So you can sort of see from here, it's been below that for a very long time. It will rebound. Here's the thing. People sometimes talk about ROC, which is return of capital. They can use that with this fund. It just means that your average cost base changes. So when I say that I get in at 13, was it 13.26? Yeah, 13.26. Return on ROC, so return of capital, does not affect that price. That price does not change. Well, in a sense, I'm completely wrong with what I said, but I'm not. That price doesn't change, but your average cost. So your average, so when you're doing calculations, so for example, if somebody gives you return of capital, your average cost base, my average cost base, if I got in at 13.26, and I probably might have gotten in a little higher, it can bring that down. So if they gave me back, let's say 5 cents in my own capital, well, instead of 13.26, that would say 13.21. So if I sold at a profit, I've got an extra 5 cents that I'm going to be, half of that. So half of 5 cents. So 2.5 cents that would be taxable. And that's just using it a little example. So what you do see sometimes with these ETFs is you see something called, I call it erosion of capital. So when you get into it, if I buy it at 13.26 and the market is not great, so for example, we had a bear market, well, of course I don't have it at 13.26. The underlying assets are going to pull down that price. So you can see right here, going from 12.74 down to 12.35. So 12.74. So that's, it's not 50 cents, but it's about 40 cents roughly. So that 40 cents is not ROC. It's just an erosion in the price. And that has to do with the market. When the market starts to recover and we get into more of a true bull situation, these prices are going to go back up and you will recover this. So that's kind of the big difference. So sometimes what happens is you'll have people who start to freak out, especially newer investors who don't completely understand return of capital. They may kind of freak out when they see some of these prices falling and thinking, oh my God, that's all my dividends just coming back to me. Well, it isn't. And I can see why it can sometimes be a little bit I don't want to say disheartening, be a little bit confusing, because what does happen is, and let me show you this. I think we should be able to hopefully see it. We might have to go down to, let's go down to the 3-month. Go down to the 3-month. And I want to come back over here and take a look at their last ex-dividend. So their ex-dividend date, August 30th, was their last ex-dividend date. We're going to come back to, we're going to come back, and we're going to go to August 30th here. So let's see here. I wanted to be on the 3-month. Okay. So here is August 28th right here. Here's August 30th. You notice how we have that drop? So it dropped from 12.42 to 12.31. So it dropped, about 11 cents roughly, 12 cents. How much is the dividend? 12 cents. That's what's happening, because when they have the ex-dividend date and they declare that dividend, all of the money that they're paying out, that's being subtracted from the company, from their holdings. Thus, it causes their market cap to drop. If you lower the market cap, it lowers the share price. So, and that's what it works out to. It's about 12 cents. So it's, and then you'll notice here, yeah, the market kind of sucked, but and we didn't recover that 12 cents, but now we're at the point where we're starting to recover the 12 cents, but we still haven't yet gotten back to where we were at that point, but we will. That's kind of the whole point. So when you're looking at some of these dividends, you want to make sure, first of all, I guess the best way to judge it is look at the market. If the market is going down and your ETF is going down about the same amount, you've got no problems. It's fine. That's just the way the market works. But if you have a situation where the market's flat, but your ETF is falling fast, then you want to be doing a bit more due diligence and seeing if you can find out why, because that is going to be a major concern. So it comes down to as well. And here's this other thing too. Sometimes people will argue on I've seen it everywhere from Blossom to the community and stuff. You get people going, "Oh my God, dividends are it. You got to be going dividends." And you got me. I'm in the middle. I'm like, I love my total return stocks. But you also have people who are like, no, the growth stuff. You're going to make a lot more with that. And yeah, sure. You're going to make, well, to me, I think total returns makes even more than growth. But that's me. And we'll talk a little bit about that. But here's the thing. You got to look at your investing goal. If you're at the point now, let's say, for example, you're one of my older viewers and you're looking at retirement. Well, you may not care about that growth, to be honest. What you may care about is having your TFSA just stacked with a lot of high dividends coming out of it, creating a nice tax-free income that isn't going to affect any of your other supports. So if you have like GIC, for example, you could be living really, really nicely if you've stacked your TFSA and let's say you've got almost, we'll say, well, if you went with really high dividends, you could probably, if you've maxed out your TFSA, you might even get up to, $800, $900, maybe even $1,000 a month tax-free. That's not counting as income. And then you got your GIC, you got your OAS, you got a little bit of CPP coming in, let's say. You can live a very comfortable life like that. And that is, to me, that's absolutely fantastic. And it's one of the reasons that your overall goals in investing should be shifting. When you first start in your 20s, you want to be looking at them growth stocks. You want to be looking at just growing. As you start to get closer, like once you get into, let's say, midlife, at that point, you might want to start thinking, okay, well, maybe I'm just going to move out of pure growth, move a lot more into total return, and start transitioning slowly into those passive income stocks. And then that's fantastic. And then that way there, when you do get to the retirement age, if you've got that TFSA just stacked. And here's another really interesting thing. Let's say you have no income, but you've got a stacked TFSA and you've got a stacked RRSP. So one of the issues you're going to have with that RRSP is when it turns into a RRIF, and that's the year of your 71st birthday, the end of that year. You're all of a sudden going to have income. But sometimes people are like, okay, well, I'd rather move some of that into my TFSA. But you have to remember, and this is something people may forget. So with the GIS, you can make $5,000, no problem. So let's say you haven't started taking your CPP yet. You've got your GIS, you've got your OAS. Your OAS doesn't count, so don't worry about it. But you've got that $5,000 room. So what you can do each year, because your TFSA, you still gain more contribution room even after you've retired every year. So you could conceivably, in that case, pull $5,000 out of your RRSP, move that into your TFSA, and turn that into more passive income that's going to be tax-free. And what that does is when you do get to be 71 or 72, depending on when your birthday is and how that falls, but when that does turn into an RRIF, if you've been bleeding a little bit of it out and topping up your TFSA with it, you're going to take a smaller tax hit at that point. So just one of those little things just to sort of pull it all together. I know today's all about dividends, so I won't get too much deeper into that. Okay. So here's the whole thing with the dividends is when you are looking at stuff like this, and you are at that point where you don't plan to basically get out or sell a dividend, then looking at a price that comes down a dollar, if anything, it means that you can buy more at that point. Now, the one thing, of course, that is a little concerning is, yes, they did drop their dividend from 14 to 12 cents. And that's something I would continue to watch. And when the market recovers, I'm hoping they'll bring it back to 14. They may not. But at 12 cents and with that current, even if it's only 11, an 11% dividend yield, that's still not bad. So it's still a good amount, and you can sort of pull things in that way. So to me, that's kind of a neat thing. It's just one of them ways that you can really, really work at, increasing that passive income. Now, some people who are not at near retirement love their passive income stocks nonetheless. They just like getting that payday. They like the extra free money every month. Is it the most efficient way? No, to me, I don't think it is, because if you get good, let's just say during bad times, sometimes it's not bad because then you've got that income coming in when everything else is sort of falling. All of your growth stocks are not doing well. Even your total return stocks are, they're not giving as much dividends as you'd like to see. So yeah, absolutely. Sometimes it looks really good in, in bear markets when you have all of those dividends coming in. But at the same time, if you have stocked up on the total return stocks or some of the growth stocks, when that bull market comes back, you're really going to get a lot of great growth out of that. So that's one of those kind of balancing points. But now some people who are interested in things like, for example, FIRE. So FIRE is one of them movements that, and I think I did a video a while back on it. It's like, what is it? Financial Independence Retire Early. I think that's what the acronym stands for. So yeah, if you're young and you're looking at FIRE, even then you want to be hammering in the big stocks. You want them big growth stocks. You want them total return stocks. You want to be just enhancing and blowing up your portfolio as fast and as efficiently as you can, because that's going to really, really, really help you out in the long term. Now, I'm gonna pull something up here. We're gonna leave TSX for the moment. I want to go to Wealthsimple. All right, here we go. We're gonna log in, hopefully. There we go. Boop-a-doo. Ah, perfect. All right. So we're gonna go in here. All right, let's take a look here. I'm used to using this one in the app, so you will have to forgive me. I'm not worried about that. We want to go here into the TFSA. Can I sort by return? I don't think I can. That sucks. I like it if I can sort by return, All right. All right. So anyway, well, we were just talking about HYLD. Let's open them up and see. All right. 1 day, 3 months, 1 year. This way here, you can actually see the whole thing. Now, this is not, this is from their beginning. So in their beginning, they started at 16.19 back in February. So you can see you would have lost quite a bit of money if you got them when they first came out. And a lot of us did. A lot of us got them fairly close to that. It will come back and it'll probably get up this high eventually again. It really just depends on the American market recovering, and we'll have to sort of see what happens here. But when we look here, for me, like this, I've got 300 shares. I'm down $273.33 on that. So that's a 6.87 drop. Yeah, so it's kind of interesting here. Like that's kind of that way. Now, I'll show you let me show you this other ETF that I have. This here, QQCC. This is one that I started stacking. Well, you can sort of see when I started. Actually, you can't. It doesn't really show. I wish it would give a date as to when I first bought my first stock in them. But I bought 383 shares, and this one here is up 8.56%, so $331.60. This here, QQCC, Horizons NASDAQ 100 Covered Call ETF. So that is, well, I got in, let's just say, at the right time, just before the NASDAQ absolutely exploded. So that's kind of a great thing. Oh, we got Muggsy in the house asking questions. Let's pull this up here. Let's see. When you say stacked, is there a certain number of dividend stocks you would own, or is it meaning quality? When I'm talking about stacking your TFSA, you still want to follow diversification, because if it's a situation where you absolutely load your TFSA all in one sector, for example, and that sector just does really badly for, let's say a prolonged time, like right now, the financial sector has had its issues for, about a year. You don't want a situation where you start running into issues because of that. You want to still get that diversification to make it as healthy as possible. So when you're looking at ETFs, so you got ENCC, there's an energy one here. You got QQCC. This is a technology ETF. So, you could have, of course, you could have something like a BK. It's not an ETF. That's actually a split core, a banking one that provides pretty half decent dividends. So there's a lot of ways that you can really spread things around, and that's kind of a good idea. I also like, for diversification sake, having access to one of the all equity ETFs. They're not going to give you great dividends though. So like VEQT or XEQT as an example. Mugsy says, I like the sound of ROE. Yeah, me too. Return on equity is absolutely one of those things that when you look at it, it's nice and high. It's just absolutely great. It just shows stability. It shows that the company is actually producing equity back from the money that they have. And if a company isn't producing equity and you get like a negative ROE, that's a company I would steer away from. Now I'll show you, let me show you something else here. While we're in here, I mean, yeah, we're talking about dividends, but I do want to show you guys this whole HMM thing. Look at this. This is just crazy. So HMM, I got in here. Well, right now it's up. I've got 332 shares. It is up $1,084.45. Look at this, 53.25%. That is absolutely a holy banana bread moment if there's ever been one. Now I get in. I get in here at 6 to 13. So if you look right now, their price is sitting at. I'm just going to come over here. I'm going to go to. Let's go to the 3 months for now. So pull this up. Look at this. This has been the 3 months. So right now our price is sitting like 9 something, I think. Oh man, this is not the easiest thing to maneuver. I will definitely give you that. But yeah, so well, here it is. Yeah, 940. So 940 right now, that is just absolutely insane. So I gotta say that's pretty crazy. Another one too, another little hidden gem that I have as well is Sir Royalty right here, srv.un. So this one here, I'll go back to 1 year. I've had these guys for more than a year. I bought down in this area, 13. Let's see here. Well, let's find out what I bought. Yeah, 13.59. So I bought down here, and this has just been a nice little stock. It's been up nice and high. Currently, right now, I'm up 19.84%. So $647.33. So you can't. I mean, you can't not like that. Yeah, no, absolutely. Hammond is just, it's just one of these ones. It's like so many people have actually said, thank you for telling me about Hammond as they're counting their dollars. It's just been amazing. And it's one of these things, like, I think they have a bit more gas in the tank, but it's also one of these ones I'm watching. I'm like, is this just a temporary bubble in the manufacturing sector? I don't think it is. The products that they make, some of the electrical, everything from transformers to things to do with capacity as well, I think there's going to be a big need as we push more and more towards building more neighborhoods, building more houses. So I think there's going to be a strong need for their products. So that's one of the things that I'm not super concerned. Like, like did that, like take a look here. They had uh it's hard, I can't get down there, but they had that one little drop down there and then they came right back up. That drop didn't even phase me. If anything, if I had been paying attention and I saw that drop, I probably would have bought some more HMM. So definitely a great little stock. And while we're in here, just because this is kind of fun, we don't normally get to do this. So let's go back a page. And of course, this is another one of these stocks that I love. I love my railroad stock. I've only got 26 shares, but keep in mind, it's $156.16 per share. Now, I got in at 145.81, so I'm up 5.32%. Not a lot, but this is one I think it will eventually explode. You look at the 3-year, you can see you've got that overall trend of just going up. It's also very recession-proof. If we have a recession, it's hard to say. I don't know. We might have one. It's funny. A lot of economists say, yeah, we're going to have a recession. I'm hoping. I actually do hope we have one, because here's the problem. If we don't have that recession and we just sort of always live in fear of it, it's not going to be a healthy bull market. I don't think it would be as healthy as if we actually jump into our recession, just get it done, get it over with, let the economy heal, and then go into a nice, solid, half-decent bull market. It also would be a longer bull market because we've already got the recession out of the way. Now we're at this point that if we have that soft landing, avoid a recession, the bull market we're going to get is probably not going to be a super great one. So I do think we kind of need it. And considering the trouble that the pandemic created financially, all the money printing, I would be really, 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 really shocked if we don't get one. But we'll have to see how it goes. I mean, either way, I'll play the market and we'll figure, as a community, we'll still figure out the best way to go. I think that's kind of cool that way. Okay, yeah, let's see. While I'm in here, let's just take a look and see what other ETFs do I actually have. Okay, so every time I see DE, I think it's an ETF at first, but it's not. There's our good old Inc. There's our good old Canoe. ENS is a split fund. They do Enbridge. I do like them. Freehold, let's see, Google. Here's HDIV. So HDIV is the Hamilton Enhanced Multi-Sector Covered Call ETF. So I do like them as well. Them, I'm not actually down that far. I'm only down like 0.60%. I get in at 15.75. So yeah, I get in pretty good on this one. It's got a half decent, it does have a half decent dividend. What the heck is its yield? So 10.28%. So not that bad. So it's a good little dividend. I get a nice monthly amount from that one every single month. So that one's not bad. There's also this one here, Huddle. So Harvest Equal Weight Global Utilities Income ETF. I do like this one. I think this one has potential. Like right now, I am down $473, so 12.21%. But if we get a really good movement in utilities over this fall and into the winter, I might be able to make a bit of that back this year. So that would be kind of nice. But it's got a solid 8.57% yield. I'm just going by the Wealthsimple numbers. And if they're off a little bit, I really don't know. I never normally use Wealthsimple's yield numbers. HYLD, we already looked at. There's a REIT in there, Northwest Health. You remember, I did that. I'm just going to pull these up for a second because I did that little thing on Northwest Health. I did a deep dive on them the other day, and I was looking at them, and I was impressed. So I actually got in then at $643, and I'm already up $177. So that's not a bad little REIT. And here's the funny thing, as I kind of talked in that read about the fact that there's some room to get it back to where it normally sits. I think on the 5-year you can kind of see. So it normally hangs out in this area here. And we're way down here. So we will eventually make it back up to this area. So I'm okay with riding that up. So that's kind of what I'm doing with that one. Whoops, let's pull this back in here. Let's see. PZA, that's a royalty. All right. We already talked about the QQCC, Slate Grocery REIT. This one I've been very disappointed with. All right. TELUS, Tulamine. Here's the other one here, the UMAX. I got into this. And so far right now, I'm down about 134. Now, see, this here says a 2.30 yield. It's way higher than that. So yeah, but I'm down a little bit. I have a feeling it will rebound because this one once again is utilities, so it should do okay once we get back into the fall and the winter. Hopefully it's a really cold winter in Europe, and which is sad that I'm saying that because I should be like, no, those poor people in Europe, they don't need a cold winter, but my portfolio does. Yikes. Anyway, hopefully we can find a trade-off somewheres in there so that they have like maybe I don't know. I just went down a rabbit hole. I can't win, so I'm going to leave that alone. That there is fine. So yeah, I think that's all I wanted to show you in that portfolio. If we do here, let's just do one little thing. We'll just jump over to the RRSP. I don't have a lot in the RRSP. That's lots of time to build that up later. That's where I have my BAM. So, for example, an Apple and Bank of Nova Scotia and Canadian Pacific. Cross Timbers Royalty Trust. That is a US one. I do love them. I got HMAX in there. So they're not down that far. And that's your Hamilton Canadian Financials. I got Coca-Cola in there. Got my McDonald's in there. McDonald's is up pretty much. $103 I've made on that. TD, but here's the Vanguard all equity ETF I have. So VEQT. So they invest in everything. So we're talking international, emerging markets, all of that fun stuff. And they're up 12.36%. Oh, Jordan's in the house. Hey, Jordan, good to see you. Welcome. So we got Jordan and Muggsy in here. And I know I've got some lurkers in here. I'm pretty sure Joe is lurking. Hey, if you are lurking, Joe, happy birthday. I know it's your birthday today. Yesterday was my birthday, so I thought that was funny. Oh, look at this. Joe is like, we missed each other by a day, which is actually funny. One of my best friends, her birthday is on my birthday as well. So it's like I can never miss her birthday. Same thing for her. It's one of those funny little things. Yeah, so anyway, let's remove that. And I'm going to, I just got to bend over like this. There we go. It's just the way I have the camera set up. I've got the camera set up so it's wireless. I got a wireless camera. I'm using the iPhone. It's going from the iPhone to the computer, and I sit it right in front so I'm centered where I want to be. But sometimes it blocks a bit of the screen, so I have to drag things around a little bit. But yeah, so those are your monthly ETFs. There's a lot more we could talk about on ETFs. It's really a topic I think that I could probably sit here for 5 hours and talk about it, but we're not going to do that. I'm trying to keep these ones at about 30 minutes. We're at 43 minutes. Who cares? If I got something to say and you guys are there listening to it, we'll do it. We'll keep going. That's just the way everything rolls. Yeah, so just to put things in perspective, so when I ask you guys for what you guys want, this was cool. This was kind of different. I'm going to. So when I first saw that it was going to be monthly ETFs, I'm like, wait a minute, come on, that's just like something I do on a typical Monday video. But what I'm going to do is if we pick something that I normally would do in a video, we're just going to go behind the scenes on here because, we can. We'll go behind the scenes. We'll tear things apart from the back end and, we won't create some kind of formal video where, I'm like, saying, hello, folks, hold on to your seatbelts, all of that fun stuff. Nah, we won't do that. We'll tear behind the scenes. We'll make this, I just want to make this a little bit more loosey-goosey, just a chance for me to, talk to you guys, because you guys and your input as a channel member is hugely important. I think it was one channel member recently. One of the things I did, and this actually comes from with the videos back in the early days. Ryan once said, "Oh, you should speed the videos up. You talk way too slow." I'm like, "Oh, okay, yeah, sure." So I've been speeding up my videos by like running, like, recording them, and then the output on YouTube was about 105%. But I had a couple channel members that are like, "You're talking too fast. Just slow it down a little bit." So I'm like, "Oh, that Ryan." So I just knocked it back to just 100% now. So all my videos now are just regular speed. I'm not speeding them up or slowing. Why would I slow them down? But and that just comes from the channel members things, and that's one of the reasons too. When I say, when you guys have a stock that you guys want me to put into the vote for the deep dives, make sure you go onto a channel member video. So for example, this video in the comments, and throw it in here, because then I know 100% that it's a channel member, and I give it pretty much, if a channel member asks for it, the next available slot, it's going in. So that's kind of interesting. That's one of the reasons that one of you guys had asked for, when you guys asked for Canoe again, I was like, okay, sure, I'll throw it in. And right now, I think it's actually leading the vote. I think it's got like 40% or 44% of the vote. So I was like, okay, people aren't sick of Canoe yet. So yeah, we just keep it going. Ha ha! There's Joe. I knew you were there, Joe. I just had a feeling. Yes, I was lurking. I was watching on my TV, so I couldn't comment earlier. Awesome. Well, happy birthday, Joe. I hope you've had a good day. Uh, so, yeah, it was great. That's great. It's kind of funny when you kind of guess someone's there and then they are. It's like, it's almost like when you open up that Christmas present and it's what you wanted. That was fantastic. All right. Well, guys, I'm going to call it here. I, we'll do this again next month. Guys, be creative. Just, whatever the heck it is you guys want me to do, let me know. Maybe not a reaction video, though. I actually got a copyright claim on the last reaction video, even though it wasn't monetized and it was a members only video. If it were to make money, I can't make anything from it. It goes to the good people over at Jubilee. So I'm okay with that. And Muggsy says, I love all the content you give to your audience and the way you get points across. You are genuine. Thank you. It might be because I'm from Nova Scotia. Nova Scotians just have that, makes you feel like you're at home type of an attitude. And, I don't want to say that I try never to ignore that. I'm like, okay, you know what? That is, to me, as somebody who is on video a lot, to me, that's a very big strength. Just bring that out with everyone and go from there. So that is a fantastic thing. Anyway, thank you for that comment, Muggsy. You're awesome. I love Muggsy. Well, I love all of you guys. So we'll be back here again next month with another one of these. I got about other couple little things mulling around in the back of my head, and we're thinking about. I just want a couple extra little things, so I'm thinking even somewhere down the line, I might do a couple of impromptu, little live, just chit chat out of the blue type thing for channel members. So, because I want to make sure that you guys feel like, because I appreciate the fact you're supporting the channel, and I want to make sure you guys feel like you're getting all of the value I can give you. So. That is huge. And oh, Muggsy, your stepfather is a blue noser. Woohoo! Yeah, we're everywhere. We're everywhere. And you're you're an honorary blue noser just because you got there. Let's see, Jay just got home from work. Well, welcome, Jay. You got in just at the end, but this was actually Jay's suggestion, today's topic, if I remember correctly. I think Jay is the one who said the monthly dividends, and you guys jumped on that. So Jay, you'll have to go back and watch it from the beginning, catch all the stuff that we went through. And uh-oh, Jordan, what'd you do? Take a huge step in glass today. Now, for those of you who don't know who Jordan is, he does make glass. He's like a blower. I think that's what you call it, a glass blower. So he makes ornaments and balls of glass, and maybe, I don't know if you make witch balls and things like that, but he can make all kinds of pipes. You name it, he can make it. but you took a huge step. What did you do? Is it accomplishment, Jordan? See, I was just about ready to run out too. But now Jordan's hooked. He's got me hooked. Let's see. Thanks, Jay. The topic certainly helped me out. Yeah, absolutely. And it was just kind of, ooh, there we go. It's a pipe, a 27-inch glass pipe. I'm not even going to ask what it's for. I don't need to know. I'm, so I have virgin ears. I just want to keep them that way. But I can kind of imagine what it might be for, and I'm not going to go there. Anyway, guys, this has been fantastic. We went a full 50 minutes. That's awesome. I can't wait till next time, and just sort of pay attention. There could be an impromptu before the next one. We'll have to see. Anyway, until then, guys, I will catch you in the next one. Take care, everybody.